General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock this workout. Eight, 7, 25 news. Screen recorder, Forex Factory. No news tomorrow. Trump might talk. Trump always might talk. You know, he talked today. No news tomorrow. No news Friday. See me Fed watch. See, probably at 100% because of the tariff thing. Okay. Yeah, 92%. Boom. We still sitting pretty high for rate cuts due to tariffs. Matter of fact, let's see. Because I think unemployment, it didn't do anything to NASDAQ, but dollar did. It did what it's supposed to do. Yeah, unemployment came in bad. No, unemployment came in bad. So could be some down days on dollar every Thursday. Earnings. Go up. Earnings is up here. Oh, Wendy's report earnings today. Okay, let's see. Yeah. Well, nothing interesting here. Besides Wendy's, because I'm hungry. Yeah. You let me get away with cuz, but it flagged me on all the other words. Let's go to the dollar. Okay, we got another down day. I like how the dollar's moving. I kind of wanted to move faster, but let's look here. Did we get a close of this level? We did. We closed below this low. I would target here next, just because it looks like we're in this gap. We haven't completely closed it, but still, I would still look at these too. It's kind of like an order block. Watch this. It's 50%. We reaccumulated right up under here. So right up under here. But lower for the dollar. Lower for the dollar. I'm still targeting range low. Okay. Today on Nasdaq. Push up, broke the high, came down, sat on the high, jumped back up. That was kind of textbook. This, whatever this is filled. It's 4-hour fair value gap. We touched this again. That was interesting reaction we had here. Okay. Nice update from Nasdaq. We're not getting any bearish signatures with sponsorship. We only been rebalancing the push up and squeezing shorts. That's all price has been doing. It's been acting like it's want to go short, then it squeeze you. Acting like you want to go short, then it squeeze you again. I think on the weekly we might have took something by now, but we could still be. I hit the tickers. No, we still in the inside week. We came up to this weekly volume imbalance though. That's pretty picture. Okay, price reached to weekly VI. Most likely the DOL. Only thing left for Friday to take is all-time high. Let's go here on the daily. That's that weekly volume imbalance. Look how price respected the body of that. How price respect the body of the weekly volume imbalance. Um, we closed above highs, so strong. The low of this accumulation is interesting, but I gotta see it take the high first. I can't sell with a major liquidity pool right above me unless it's in a kill zone. So sometimes I have to just type it out and then go back and spell it because it'd be like right. Boom. Trying to go back, you lose your train of thought. Yeah, so this is the interesting part though, because look, bing, 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 these candles, huge accumulation. This low, super juicy, which is that low. But we're right here, selling here. One more down day than the sell, but just selling here is like aggressive. There's no confirmation. H4. What's this? This old daily high. Smacked it, came back, wrote it, came back again to this high. It's kind of made things easier. This is the end of the day. Interesting week. Even though the daily has been atrocious, the H4 has been peaceful. Expansion, retrace, expansion. Textbook. I got in here. I'll hold it on Forex. I'm a eventually, because this got left. This is next. Just daily liquidity pools. Previous week's high, major liquidity pool here. It's Friday. Nothing really to push it, but nothing really to stop it. At the here, it's just here next. Still got that Fed projection here. We never came back to Tuesday EQ, but when we do, we'll come back here first though. Yeah. Range high at 23,848. Range high at 23,848. This one target. What do I say? It's Friday. Don't sweat it. The movie we could come on a Friday, but I like to cash out on Friday. Friday, middle of the day, after 12, things usually cool off. Export this. Okay. Hold on, I should just throw that right here because You just don't put it all together real fast. Go to the daily. CEU. Never came to the BPI, which is cool. Don't have to. We use this level. This is what we got interested in buying at. We're up. Today's done. Retracement done. Fair value gap here. Let me watching here. I kind of want to see this high ran, but it's Friday, so I'm not gonna sweat it. We're in here though, and then here on the daily, right under it. So we need to close above this. Friday could retrace. All right, yeah, let me export it separately. It's okay, I'm making good time. Thursday, bam. Here. EU. Just watching on the daily. It's a swing. What's this? Monday, Tuesday, Wednesday, Thursday. Tuesday, low of the week. Thursday, high of the week. Yeah, chill out. We'll wait. And then next week, you should be more interested with CPI, things of that nature. And is to watch the left side of the curve. Not adding yet. I want to fill this daily fair value gap. Turn it into an inverse level. Then start stalking lows. All right, that's that on that. Then here, these ain't even really one shot, one kills. These are like swing trades. Today is the 7th, 8.7.25. Okay. Price swept previous week's high. So this retracement is cool for me to buy. The inversion fair value gap is ideal, but maybe next week we look for better positioning because we don't want to chase. We want to buy under daily lows. Okay. Oh, this is how I can do it. Simple. Boom. All right. That's that on that. Y'all have a good day. Peace.